want to start off with this redhead that crossed the terminal just 10 minutes ago about the yen on the move because of a report that perhaps the ruling coalition in Japan could fall apart. Your thoughts on that?
Yeah, hi there, Valerie. So it's an interesting one. We don't know all the details yet, but the idea that the ruling LDP won't get the support of its coalition parties leaves it looking pretty vulnerable, and certainly opens up a rather uncertain path ahead for Japan. There's still a possibility that Takaichi could continue to rule over a minority government. That would probably be more difficult then for her to get things through that she wants to get done. So it might reduce Japanese ability to do stimulus spending, therefore weigh on stocks a little bit. It might, kind of take away some of her powers. And the market had been assuming that she was very bearish for the yen. We saw a little bit of strength come through immediately after the headline as a result that maybe, that won't be able to have the same impact. But we might get other scenarios. Maybe the other coalitions in a wildcard sort of scenario could try to form a government without LDP. That would create a lot more uncertainty. I don't know if the market would know how to trade that necessarily, and so it would probably be taken as a negative, at least for equities. But I think what's interesting here as well is, we've been writing earlier in the week, the yen hasn't been looking very much like a haven or performing like a haven in recent days and weeks. So if there is more risk-off and uncertainty for Japan itself, does that mean a stronger yen, which you would have normally expected in the past, or may it actually weaken the currency instead, which would be a really interesting development?
I think the Swiss are watching this very carefully right now. Paul, I want to talk about emerging markets from a number of different angles, one of which is the fact that we've got this kind of dollar momentum trade, which is beginning to build a little bit of ground at the moment. And that kind of speaks negatively maybe to the idea that emerging markets are going to do well going forward, which has been a lot of a conversation people have been having. The other one is like the US is intervening in Argentina, which again kind of just raises hairs on the back of your neck about kind of Argentinian risk, EM risk. Are the stars kind of disaligning now for that EM trade?
It's a really difficult one to tease out. Emerging markets have been having such a great year. Emerging market stocks are up every month of this year, 9 months in a row, which is the longest winning streak since 2004. So they've got a lot of momentum behind them. But part of that premise, as you were saying, Guy, is the idea that the dollar is weakening. People are putting their money elsewhere. The currencies of emerging markets can fare well against the dollar when the Fed is cutting interest rates. So the fact that we are seeing this kind of bottoming out of the dollar and a little bit of a turnaround in some areas, does jolt that confidence a little bit. Now, Latin America has already been performing better than the dollar, even when we've seen a little bit of this recovery. So it's not certain that that's going to impact there particularly. But this is, like where we've got that really interesting thing, and the swap going on with Argentine pesos, the efforts by the US to support Milei and his government to help him through local midterm elections that are coming up and keep him in power. Feels like a political play as well as an economic play. But Argentina has defaulted so many times, they think the best way to prevent that happening again is to prop it up this time.